Wondering if it's the right moment to make your move in the Southwest Florida real estate market? Two new bills might just sway your decision. Here's what you need to know. Hey, I'm Rick Harrison with MVP Realty right here in the heart of Southwest Florida. In today's update, we're zeroing in on the pulse of our local real estate market. We'll start with the latest stats to give you a clear picture of where things stand, but there's more. We'll dive into two pivotal bills that promise to shift the affordability landscape for homeowners. Plus, I'll share expert predictions on a looming market shift towards a seller's market by year's end. Whether you're thinking of buying or selling, understanding these dynamics is going to be crucial for your next move. So let's dive in and decode what these developments mean for you. So starting with the Lee County weekly trends, I'm not going to be going over the monthly trends, but I will be going over the annual data so you guys can really see the charts and see where things are compared to where they used to be. So first, starting off with the weekly trends, new listings, we have 875 new listings over the last week. That's down 3%. Solds, 35% down to 206. That's a pretty large decrease, but again, with numbers so small, a shift of 50 or 60 properties is 35%. And then again, pending, this is what's going on right now this week, over the last week or two. These are homes that have gone under contract as we speak. So 581, that's up 7.8%. And that is actually happening with mortgage rates actually going up over the last week. They had their largest one-day gain just a week ago. Median sale price is actually down 2% week over week, down to 397. Last week it was a little bit over 400. Median listing price is where people are actually listing the property, so you can see that is actually down now a little bit too. Sellers are starting to understand that the market has shifted. They can't be asking for more money than their neighbor's house just sold for. Things are starting to come down a little bit, but again, 2% is not a huge price drop. Days on market, that's at 43. That's up 4.6%. This is a combination for Lee County of both single family homes and condos. This is the median sales price. As you can see, this is what people are worried about, is the fact that prices kind of skyrocketed. This is from 2017 all the way to current prices right now. As we hit into 2021, that's when prices really took off. But as you can see, prices have come down a little bit from their all-time highs and peak, but they're really kind of stagnant. All right, new listings. This is a big thing. People have been talking about it all over the internet, especially on YouTube. Listings are skyrocketing. There's so much inventory coming on the market and not many people buying. Well, here's a good indication of what our market looked like and what it looks like now. So you can see, yeah, we're way up there. We're at 3,750 new listings. But if you go all the way back to 2018, that was the peak, and that's January. So almost all of those peaks that you see are in January. January is the #1 time where listings come on because a lot of the homes that didn't sell last year, they had their contracts listed to December 31st. On that December 31st, if they didn't sell, the next day it was, guess what? It was called an expired listing. And then most of those people decided to relist at the beginning of the year. So you see a ton of inventory flood on at the beginning of the year in January. Active inventory. So another good indicator, where are we at as far as how much inventory is on the market right now compared to historical averages? Well, this red line gives you an indication around 9,000. We're a little bit above, but we're not at the peak. I mean, back in 2019, 2018, we had more inventory on the market then than we do now. Also, pending sales. Where are we at? Is there really not that many buyers in the market right now? Well, you can see from this chart that we're pretty close to the average where it's been. It's been a lot higher. In 2021, it was way up there, over 3,000 new pending sales in 1 month. The fact that we're back down here, yeah, pending sales are pretty much right in line. So just based on these last couple of charts, you can see as far as we look historically, we're not really that much different than where we were before all the changes that came in 2020. All right, moving on to Collier County. Week over week trends, new listings, 478, that's down 4%. So there's not as many sellers listing this week. Sold 99, that's down 32%. So definitely we're seeing less actual closings, but again, 30 to 45 days ago, interest rates were a lot higher. They were almost at 8%. Pending is a better indicator as to what's going on in the market right now. 293, we're up 4.6%. More people are putting in offers and getting homes under contract right now. Same thing here, median sales price, 680. That's up 1% from last week. Median listing price, still going up. That's actually up almost 7%. Just week over week. Then median days on market, we have 45 here. It's down 13.5%. So homes are actually coming off the market or being sold faster right now than they were last month. For Collier County now, median sales price here, again, you can see it's the same look as what it was in Lee County, but compared to Lee County, where we actually saw the prices dip a little bit and come down a bit and stay there, we're actually still seeing the prices go up and down. We're almost hitting all-time highs again last month. Here we go for new listings for Collier County. As you can see, that red dotted line across the middle is the average if we were just taking it. Yes, we do have a lot of new listings coming on. We're at 1966 for this month, but compared historically, 2018, 2017, even 2020, all those peaks are right at January. Again, same thing. People expired on 31st of December and now relisted on the 1st of January. You have a spike in inventory, and that's exactly what's happening here. Again, this is a pretty large increase in a very short period of time, but it's not really that different than some of the other peaks that we saw and how quickly those increased. Active inventory on the market. We're not even close to the average right now where they were before all that stuff happened in 2020, right? We're still not even back to the average number yet. So here, even though it's up 55% from last year and it's up 14% from last month, 5,000 still well below the average of around 6,200 active listings on the market. And then new pending sales, again, we're right around the average. We're not way over, we're not way under, we're right around the average right now. All right, let's look at the current inventory, and I'm going to go into the historical inventory total so you can see what that averages look like. Current inventory monthly trends. I did not change the date, so sorry to Blake, who did call me out on many of my mistakes in my last video. We had single families, 9,364 over month. That's up 8.5% from the previous month, and it's up 56.3% from last year at the same time. Condos, 5,732, that's up 16.6% from last week, 109% from last year at the same time. I know those annual numbers look huge, but just remember, the last 3 years were not normal markets. The inventory was way down, prices went way up. So a lot of this stuff is changing. We're not really comparing it to historical standards, which I'm gonna do in the charts right after this slide. Foreclosures, 43, that's up 5 this week. Interest rates, 6.43%. It's actually at 6.8%. Right now, and that was up 32 basis points. That is an accurate number. Average rent, still no change. All right, moving on to the total average single family inventory, 9,364. That is up 56.3%. Again, you can see this is the same thing. So this is across Lee and Collier counties. Again, we're not back to all-time highs that we were in 2019, 2018, 2017. We're still not there yet. Single family inventory, new pending sales at a little over 1,800, 1,832. And again, a lot of this stuff starts to peak out in the springtime, which is when most people do list and a lot of homes do get, go under contract. Now let's switch over to this week's Market Watch. More than 3/4 of millennial homebuyers would consider an interest rate higher than the national average of about 7%, the study found. 65% saying they would pay up to 10% mortgage rate, and 23% admitting they would buy at 15% or more. Now, 15% is pretty high, especially with prices where they're at. If rates ever did go that high, I would expect prices to come down significantly. But I don't think we're going to be seeing that anytime soon. If they do, yes, I believe prices would definitely come down quite a bit. Although 35% of millennials fear making major home repairs, they have embraced fixer-uppers. 2/3 of millennial buyers would purchase a fixer-upper, but 18% of millennial home buyers who bought one regret it. Now, this was where I thought things were a little bit interesting, and I wanted to point this out because I thought this was very important, especially to those of you who are millennials or Gen Zers who are looking to buy your first home. These two things are key. Millennials' idea of a fixer-upper goes well beyond a home that needs a new coat of paint. 2/3 of millennials would buy a fixer-upper with asbestos, 62% would buy a home with mold, and 58% would buy a fixer-upper with a bad foundation. I really highly recommend, as a general contractor in my previous life, do not buy any of those things. All of those things require special removal or special treatments or special repairs, and they're going to cost a lot of money. More than buying a fixer-upper with those kinds of issues is going to be worth in most cases. If it was really that good of a deal, an investor would have gotten on it already and figured out the numbers to where they can make a profit. All right, now for the moment you guys have probably all been waiting for, the two bills that have been proposed. They're not passed yet. These are two proposals that I think a lot of people would be happy about, and I think could potentially get some traction and would definitely make living in Florida a lot more attractive. The first Florida bill is a Florida bill that would create a study exploring elimination of all property taxes. Originally, House Bill 1371 was filed on January 5th. It was supposed to exempt $100,000 of value of real property from being taxed. but they've altered this bill and they're now looking at this bill being proposed to implement a study that would allow them to look into the aspects of eliminating property taxes completely for Florida, which have gone up quite a bit lately and are actually starting to force people out of certain areas. And if that did happen, no state tax and no property taxes, the amount of people that would want to move here, I think, would be incredible. The second bill addresses the insurance issues that you've all been hearing about. Florida lawmaker promises new bill would drop insurance rates like a rock. He doesn't have much support on this yet, but what he's proposing is something that I think is worth looking into, and I think people will start to look into because insurance has become a bit of an issue in Florida. House Bill 1213 would drastically alter the mission of Citizens Property Insurance from the state's insurer of last resort to the first option for windstorm coverage. Not flood, but windstorm coverage. As we wrap up today's deep dive into Southwest Florida's real estate market, it's clear that the landscape is evolving. With these two bills aimed at making home ownership more affordable and the forecasted shift back to a seller's market, the implications for buyers and sellers are pretty significant. For those of you considering buying, these changes represent a window of opportunity. The potential for increased affordability could make now the ideal time to enter the market, especially before the predicted shift towards a seller's market later in the year. And for sellers, understanding these changes can help you time your sale to maximize your returns. Remember, the journey to buying or selling a home is unique. And while stats and legislation provide a roadmap, your personal circumstances and goals are the true guiding stars. If you found value in today's video and want to stay updated on the latest market trends each week, subscribe and hit that notification bell, or you can reach out to me directly at 239-310-5478. Thanks for watching. I hope to see you in the next video, but until then, stay safe, stay positive, and more importantly, stay free.